Good evening. Welcome to the ShadowTrader video weekly for Sunday, August 11th, 2013. A lot of people are really wondering when this market's going to come down, and I keep hearing a lot of bearish talk in the media, and it still seems to me that it's not ready to come down. Just the general pattern of things here, when I go through these broad market charts, I think would show you that. I mean, if anything in the S&Ps, if we would really have to take out this swing low level here, which is the July 26th low, in order to really get any downside action happening. But generally, what I've seen from experience is that this is not really the type of pattern that precedes a downward move. One thing that should jump right out at you is you don't have excess on the high, which I've been talking about for a while. The 522 bar has excess that you can clearly see here on the shadow here, and of course we've looked on the profiles before. You can see there's excess there. You don't have excess here. Instead, what you have is this sort of slow undulation back and forth. And what's happening almost every day in the markets over the past week is that you're getting what are called liquidation breaks early. And what it is it's very weak-handed longs selling their positions quickly. It's old business. It's not new money shorts coming in. And what that's actually doing is actually strengthening the market. And you can clearly see that every time this market, they have these little liquidation breaks. We had one here on August 6th. It was bought back up. August 8th, excuse me, this is August 7th. I apologize. August 7th, bought back up. August 8th, bought back up. August 9th, bought back up. So these little breaks are actually taking potential sellers out of the market and are strengthening it, as opposed to when you look at the market that's like this, it's just going straight up, 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 right? There's no potential sellers being taken out. There are very few liquidation breaks there. So that being said, I think the market still wants to make another move, at least to some new highs. Also, I'll reiterate, as I was just saying, that this is really not the pattern I would think that a breakdown would come from. I would think that a stronger break would come from a more extreme up pattern. You can see now clearly that we've been talking also about the distance that the 20-period moving average has been below price action. That is now caught up. Now there's absolutely no distance between the 20 MA and the price action. So let's look at also just some of the other majors here. This is the Dow, which is probably the weakest of all of them. It has actually moved down below this support level, but if you look at all of them together, it's kind of the anomaly, right? Because look at NASDAQ Composite is actually well above the 20 MA. It's nowhere near the pullback low, and NASDAQ 100, same thing. NDX nowhere near it, and Russell as well, I think, is showing a lot of relative strength. Actually, Russell actually made a doji type bar on Friday, and if you look at how the SPX looks, it's a little bit more bearish bar. Okay, all right, so that is the technical picture going forward. Let's take a quick look at market profile. Market profile, I think, over the last few days is confirming what I just got through saying, that there's really an absence here of longer-term sellers thus far. Last 2 days in question, which is August 8th and August 9th, there's a clear lack of excess here on the high. We had a poor high here on 8.8, which still needs to be repaired. Remember that repair means that you take the bottom part of the profile where there is excess and you sort of add it on to the top part, sort of cut and paste it to make that profile more complete. Usually the general way that you look at poor highs and poor lows is that you assume that when the poor high is put in, short-term traders got themselves overly long. They will probably liquidate their position. We saw that the next day. We did get a liquidation break, as I was showing you in the technical charts. You keep getting these little breaks, which is actually strengthening the market. Once that liquidation is over, you would then expect price at some point to go back and revisit the excuse me, the poor high and repair it. So I'm keeping that in mind, that the high from 8.8 was poor, it's unsecure, and 8.9 did not 8.9 did not repair yet. You went a little bit shy. Overall, when looking at these distributions over the last 4 days here, you should be paying attention to the fact that value, which is the yellow blocked off areas, this is the value area where 70% of the volume in the ES went off. You should note that value is not really moving lower. Value has been relatively unchanged. Over the course of the 4 days, price has had some situations where it's moved lower, but value really hasn't. This was a breakaway of value lower on 8.6 on a gap lower, and then a little bit lower value on 8.7. But notice what's happened in the 2 days after that. Price didn't actually go lower, and value is actually much higher. It would be a little bit more bearish to me if value was contained here in the same area as 8.7, but it's actually not. 8.8 value was established clearly higher back in the range of 8.6, and on 8.9 value was overlapping to lower really, but consider it overlapping to higher in relation to this and overlapping to lower in relation to that. So not a lot has happened here. Basically just a 4-day balance over the course of last week. All right, that being said, I still feel that it is okay to favor trades that are looking more towards the long side. Here's a few good ideas that I've been looking at. I think that Apple wants to come into trend line resistance and bounce. This is going to be probably a sweet little long play off the 20 MA and around the 445 level. I like the fact that the trend line is very young. It's just been established for the first time here with these 2 points. So I'm going to be looking at a long play on Apple around the 445. Another one that comes to mind is MasterCard. I went long this stock last week on a 650 breakout, and if you follow my comments on Twitter, you'll notice that once the stock broke out over the 650 resistance, because at the time it was showing a lot of relative strength as the market had pulled back a bit, but MasterCard was rock solid. I purchased deep in the money September 550 calls, which were like 95 delta. And at the same time, I also purchased a weekly, which expired Friday, 650, 640 put ratio. That means that I was long the 650 put and I was short 2 640 puts. And on Friday, I had to get out of the position for a much smaller loss than I would have had I have just been holding the 650 puts, because you can see the 650 puts actually by the close of business were against me by $12, but the ratio spread was able to be sold for like a $7 profit right when the stock was still at 640 here. It was actually, it hadn't gone as low. So basically at that time the long calls were down by $10, but there was like a $7 profit in the ratio spread because of that long 550 put. So this is an interesting way to mitigate risk using like either stock or a longer term call and then hedging it off with a weekly spread. And it also speaks to, I think, where is the right place to get out of a trade. My thought process of the whole thing was that if I'm buying the breakout at here at 650, anything between the 650 and this 640 level here is really noise. And that was the reason why I bought the put spread, because I wanted to stay in the trade at least till 640. I thought the trade had a chance of breaking through and then retesting. So I didn't have a problem with it coming back down, but I did have a problem with it losing 640. So once it lost 640 late on Friday afternoon, it was time for me basically to dump the calls, sell out the put spread, realize a smaller loss than I would have, and move on. Okay? In the future, do I think MasterCard is still in play? I actually do. I think MasterCard could still be in play. I'm going to keep an eye on this rising 20 MA here as a possible support point, and also possibly the breakout level from here, which could be possibly a support point. So I'll be watching for that. All right, another name that I'm interested in is International Business Machines, IBM. You might have heard of this company. They make typewriters. And the stock, I think, is coming down to a decent support level here in the low 180s. So I'm going to be watching this 182 support here for a buy, just for a little bounce, and I think the stock could easily come back probably to the downtrend line or somewhere into the middle of this range around the 199. And another one that comes to mind is Amazon. I'll switch it to a daily. Amazon is making a nice orderly move down to an ascending trend line, also to its rising 50-period moving average. I think this low 280s area is probably going to be a buy point as well for a bounce in Amazon. All right, that's all I have for this week. Short, concise, market profile, a few trade ideas. I will check you guys next week. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, I wish you good trading and good night.